Good evening to all traders. Welcome. This is the markets with Odinga. I have opened and together with my algorithm, we will be working on the preparation for the coming trading week. It is a new week, new month. It is the 30th of June, and we will enter the month July. So custom wise, I open a new logbook. It was logbook 8. Go and open a new logbook. Then have him ready. Copy the logo picture. The flag from Suriname. I greet all that will be tuning up and listening to this this analysis and review, and we are going to set out our prediction for the coming week. Yes, we are predicting price action delivery, and all that our analysis is it gives us a basis, a strong reason, strong arguments to approach the market and to have a balanced way to approach the market. It is not the be all and all, not everything. So it is just an approach of the market from a technical and a logical algorithmic standpoint. This is the disclaimer once more, please take notice of it. What I will be doing this day is that I will focus to cover the analysis. I think we will analyze. We have trade last week in the ES. I think we will continue trading in the ES, but it is a new month, so we'll go over to the chart. Welcome once more to this channel. I think you'll learn much being with me, studying the chart with me. Especially, let me go to the channel and have something to say about the content. We have uploaded our 109th video, and I welcome all the subscribers that joined me lately. I start from Thursday. I start a 60-day trading in the silver bullet window execution video series. What I will be doing today is, first I will analyze the chart in NQ, in mini contract, and then I will go later and do the analysis on the micro contract. And the analysis for the micro is meant for those that are studying and those that are viewing the chart with the instruction that they are to focus on micro contract. This is the 1 minute chart. Again, it is the market with Odinga, algorithmic trading, applying ICT concept in tape reading, which is what I promise, what I am aiming for, knowing that good tape reading is prerequisite to to good algorithm, to well trading execution, well on with the algorithmic concept learned and taught and learned by ICT. Um, Learn from ICT, taught by ICT, and learn from ICT. We are going to the chart. You are on the 1 minute. Friday, the market close at current. I make a current new week opening gap Friday, the 28th of June, closing price, and it is settlement. There are three main uncertainty that we will not, or we are not yet able to determine before they happen. And the first one is to know the opening price when the market opened at Sunday 6 o'clock. So later at 6 o'clock when the market opening, to know where it opened or where it will open, be it in premium or discount. We cannot know that, and we don't know that. So this is one uncertainty that we accept. We embrace its uncertainty, all because we don't know, we don't have the mean to determine that before. And the second one, together with the new week opening gap, also the new day opening gap. We don't have the mean to determine when they open. We are looking at them as given, so that's why will be here. I think we'll be here until we see the opening price. We mark the new week opening gap, and then we will be, and then we will close the recording. I'm making notice this is last week new week opening gap. Last week opening gap, this is last week, and now we will be hunting the current new week opening gap. We are looking at these these new week opening as they are close to each other. There is some information that we can read from that they are close together. That's some advanced stuff, but for now we are hunting we are waiting to see where they will open, and then we will work with that. When the market opened at 6 o'clock, all we do is we come to the chart to define the new week opening gap for the whole week, and then we won't be trading whatever liquidity we see. Even if we see any price, we will not trade. We just wait until after lunch hour, 12 o'clock on the Monday. So there is room for us to allow the market to establish a direction, a bias for the week. That is what we do on the Sunday opening price. We stay with the market for a quarter to 1/2 hour, for half of an hour. So we go from the 5 minute. We'll be deleting the market if indeed Friday trade. Drawn liquidity is on the sell side. When we were way here, I took my profit. I enter here in this RAM. I took my profit here. I came out and I make this note. There is a bigger trade in play, but for a Friday, for me it is enough. No trade, just say breathing, study, and so forth. Day 2 of successfully completed, and indeed we have seen this sell side delivery, which is a market maker sell model. I have hunted, I saw it, and I have recorded. I'm going to hunt short. Indeed we did hunt short, and it was a great reading last week. So drawn liquidity, that is where I took my profit. Let me see if it's still I think I have put just one trade. Friday, yes, this trade, yes, I enter the first trade. I enter right there when the market was going up. I have set a for a second run. I set a limit order, and it triggered that limit order right there, and I took profit at that, focusing on what we call TGIF, but had made those note that price would have gone and complete what is known as the market maker sell model, and price have delivered beautifully, even going down to the engineered liquidity. We were hunting the whole week. So here we have it. Still we are executing and demonstrating our capabilities, our potential on paper trading. The market is now closed. We go into the 50-minute chart. Time to begin to clear. 50-minute chart. Clear that CB, and this is a bigger liquidity run. This one. We will clear that to this engineered liquidity that has been engineered as price was going up. Price came close to this engineered at this liquidity and did not take it, and start rallying, building up this engineered, where they were accumulating, and they dropped down aggressively. Friday was a very great and wonderful run to the engineered liquidity to be rated that we have mentioned since the Tuesday. So what I will be doing this week, I will backtest and journal, put this experience in my logbook, and have it there so I can have it to reference going forward in my experience. This is the 15-minute chart, a beautiful run. We're going up. What if we here? I want to see price and just buy chart above before lunch hour, and then I will hunt the TGIF. That was when I was here, was reading the price. I marked this TGIF, the 20, the 30%, and I wanted to see price and gauge this last week high first, and then drop, and then I would be hunting TGIF. But when I dropped lower to the 15-minute, I saw that the body had been taken out, so I did not demand for price to take the high, and I trade the TGIF and profit greatly from this run. Actually, I could have stayed longer. If I have left the trade and go do something else, I would have captured a bigger fish and run this wonderfully. But our focus was on the execution on Friday, end of the month. We are in the summer period. We don't expect big and large range move, large candle move. That is what we will discuss today. This is the 4H. We are going to the 4H time frame. From here, you are seeing price have is engineering some kind of liquidity up there, like in the sense of relative equal highs. The idea that this area is a safe haven has been engineered from now I'm beginning to look at price to want to drop lower. I have not yet analyzed and check out, looking at price to want to continue to drop lower to the downside and give the impression that this is a safe haven above marketplace, engineering buy side liquidity to be rated in a later and maybe the second or the last week of August. We had predict this kind of movement that we have entered in the period where there is less news, less activity in mainland USA. We can't say less because now they are with the discussion, the debates. We have saw the first CNN debate, presidential debates, and that all. So the politician, Congress, this is the summer month consolidation. Now, from the daily chart, I want to discuss this next point that I want to talk about. I will be clearing the TGIF when we reach the weekly time frame. We have seen practically price rally, bullish trend, bullish rally toward the upside. And now from the 20th of June until the current what we now have, we are actually in the time where we expect price to consolidate, have a slightly bearish consolidation. I'm expecting large range consolidation, like price to first drop to the sell side, take short term, engage short time, engineer liquidity, and then drop until seasonally. I am expecting price to drop, take the swing high, and make the first summer low, continue to go to trade lower, to make the fall seasonal low, and then to rally and toward December. So this is last part of the year. I'm expecting first this large range consolidation with a slightly bearish tone. I'm expecting also price to engineer more buy side liquidity and then run it, engineer buy side more as they drop and run it, giving but continue to go lower, create a fall low, another summer low. Now we are in the summer season, in the summer period. The mentor has advised us to do our own research from the more research center to compare and see what seasonally usually what happened during the summer months. And then if we reach the summer low, maybe this order block might be a cause for the summer low. It is also a swing low in a busy, or we may draw some further to make a summer low. And then I'm expecting price somehow to trade toward the September-October low. I'm discussing seasonal tendency, and then from that area we'll be focusing on the seasonal low to the bullishness of the market. We are expecting the election. Why we have not yet, we have seen that price the market have not been obeying the seasonal tendency this year as we would like it to. We've seen that price has been pushed to the buy side rally most of the time, mostly this past 6 months. What is important is that I'm thinking that I'm predicting that this ladder will see that low, and around November we might have the sharp drop into the low, and afterward we might see to make the seasonal low, and afterward we might see the 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 fall low to rally into December month, and to close to the end of the year. We are not there yet, but it is the general expectation that I have. It is from the daily chart. I see here, you can see that they have engineered some liquidity about market. This is a swing high. This is also high engineered liquidity, giving the impression that their price is to go higher, and we see that their price rally to almost the last week high, did not engage it, left some engineered liquidity up here to be ran, if not this or next week, in one of these weeks, or left for the rally of September. So we are looking at the daily chart. Let me take this one off. No, I don't have to take it off. This draw. What I'm focusing is to see this buy side, this weekly low, these relative equal lows, this 4H busy, this order block, this volume imbalance, and there is enough reason to see why price can open and only go to trade one-sided toward the sell side. Okay, whenever it is what I have been preaching and talking about in these series, this analysis. I'm looking at these relative equal lows have been engaged, create another strong equal low that has not been taken yet, but price did close below the consequential encouragement of this tail, giving me the indication. This is for me a sign that we are going to be trading lower, or because of this close below the consequential encouragement of this tail, which is a gap in as how the algorithm look at it. I'm going to be expecting price to open. That's why we want to see price open. Maybe trade make a rally toward this 25%, or a rally toward this new week opening gap being a draw, and then drop to the sell side. That is the narrative, the bias, the directional bias that I am already beginning to form going up. The algorithm come from high time frame to low time frame, and circle back from lower time frame to high time frame. And now we are going from low to high, and this is what we are already seeing on our way going up. We are waiting for the opening price at 6 o'clock, and when we have our opening price, we will be able to do some more prediction, and yes, prediction. We are looking at this long wick, meaning that this as we go, let me go to the weekly chart. This is the weekly chart. We're looking at price. The only thing that we are asking ourselves on a weekly chart is where does price most likely, where will price most likely trade to, and at the end we are not trying to predict the closing price, but where will this candle that is about to form, where do we think that it will go? Is it to the upside or to the downside? That is what we are focusing on. Then there are certain questions that we are questioning ourselves. I will go to the monthly, the one monthly, and the month have closed, is about to close, and then we will be doing here our analysis from now. Normally, actually after I am done doing this audio analysis with you, I will be go to do some back testing and have some things on my writing something annotations on this blank space. We see that the month have closed. It is an up close month. Price has what we call this familiar pattern. It is good to notice that this is a familiar pattern, and even on lower time frame, price is price. It is fractal. Even on lower time frame, this is when I see this pattern, I am always taking this as a confirmation to sell from the opening, allow it to make this dual swing, and I'm focusing on the sell side because of this pattern. It is a bullish order block, but it is a very strong bullish order block when we open, when the open has been violated traded pairs, and there is in this case a change in the state of delivery, and we close just below the opening of this down close candle. I always, when the market open, I buy it and I put my stop loss at the mean threshold of this candle, and then I expect price to expand higher, enjoying this wonderful pattern. This is the monthly chart. We close on the upside. It's good to have this annotation from the chart for now. Now we are going to go from the make annotation from the monthly down to the 15-minute or 5-minute chart. From the monthly perspective, we are now, this is the month June, and we will be opening month July. What is best to do is that we give this wick. This is not a long wick, but it is good to create this wick too. The reason why it is good to do that, because we are doing this from a monthly time frame, and these ranges can be on lower time frame very nice and wonderful trades. So I am, it is the consequential encouragement of this June wick. And the monthly, I use the color red to do annotation on the monthly chart, and I want to have the 25%, the lower quarter. The upper quarter is this. 25%. From here, when we trade to that side, we call that the upper quarter, so it is a 75%. And then from that side on to the green, we call it the 25%. The lower quarter and the upper quarter. It is good to make notation of that, for they will have some influence on price delivery. We have the June candle. I can have it till August. From the monthly chart, this is what we make note of. There is a room here to see if the month will open and drop lower to make balance, this practically gap now. If the opening is here, we may expect that the month will drop first. Even if it will go higher, it will drop to make balance this seemingly imbalance. This is the same question we ask ourselves that we ask on the lower time. Where is it? From where does it come, and where do we think? Where is it now, and where does it come from, and where do we think it is going to go? Price expand from this order block. We trade it from this familiar pattern and go to the upside. Even if price will continue to go higher, price will drop from the opening, and it is about from the opening about 90 handles down, and sometime lower. And I'm expecting if it will drop down, it will first drop way to this order block. I don't expect it to reach the main threshold of the order block, but first to the order block, and then go higher. The thing is that we want to see range expansion to one side, and what we are predicting is if price will go lower or higher. Even if it will go higher, it will expand from the opening. It can go make a Judas swing toward the consequential encouragement of this monthly candle, and then start dropping to go lower, or it open, drop lower first, and then expand higher if it will go higher. But all this we'll be looking at it on a clearer way. Maybe I can make this. No, I know what I will do. We'll be looking, this is, I make note of it, like this is this month is June, this is May high, month May high, the high, month May high. So we want to see price drop to this to make it balance. We have seen to don't have too much annotations on our chart. This is what we have just witnessed. This is June high. We are working on a monthly time frame. Understand that the large institution and the big large institution are moving their assets because of the largeness of their assets, their money. They are using the monthly, weekly, and daily time frame. Because of the largeness, the vastness of the asset that they are moving, they are using the monthly, weekly, and daily. So if we see a range expansion or expect a range expansion on the monthly chart, that already is giving us our range of opportunity, toward this consequential encouragement. It is about 38.5 handle up. That is on lower time frame significant. We are focusing, I'm going to focus to price to reprice to that 80 plus 50 plus handle range of opportunity, ROO, range of opportunity. Price can open and go higher. For now, what we are expecting, what we are going to be looking to find evidence is for price to reopen, reprice to first this high and then later the order block and then continue to rally, or first just to this high and then rally higher, or continue to go lower given the seasonal seasonal tendency. Take a picture. Normally I would be writing here. I'm glad that I am able to see that price has traded as I have predicted from the order block, using first trade down, balance this monthly CD trade from this because it closed above the consequential encouragement open, and trade and close below. I use a familiar pattern and go higher. That is what I will be writing for the priming of the algorithm that I am programming. It's a new month, and this is book 9 desktop. I call it logbook. We are closing logbook 8. Now we are opening with the new month logbook 9, the consistent, profitable, independent thinking trader. And now we can take logbook 8 out. So this is our first picture that we have from going down, analyzing the market. We have tried to get a picture from what we have seen this past month. Most of the time this is the mid of the quarterly shift. I will be looking to see some quarterly shift, not a strong shift because of the seasonal tendency, but what also is happening in the mainland of US and other geopolitic era. I will be just looking at the range that I'm expecting to see with a small bearish drop, expecting it. It does not have to be that, but I'm expecting it to drop and then create a low in the fall to rally toward December. Go to the weekly chart where we'll have our annotations. We have transposed, the platform is transposing the monthly annotations into the weekly. Here we are already from top seeing that on the weekly chart we are looking at a BASI. What is a BASI? It's a buy side imbalance, sell side inefficiency, and this BASI, buy side imbalance, sell side inefficiency, is what I'm looking for. The questions that we are asking ourselves from this chart, this weekly chart. Where is price most likely? Where is price most likely to trade to? This candle that we are looking at when the market open, where do we think price will trade to? And for me it is one-sided, even though there is a relative equal high, meaning there is engineered liquidity above marketplace now. Last week we seen 2 week ago. If we have this, then it will be 2 week ago. 2 week ago high. That high, we came very close to engage it last week, and we did not giving this high even on the weekly chart, and strong reason for the market to want to reprice to this above this high, because it is relative equal high, above relative equal high, stronger than just a swing high. There is strong liquidity in form of buy stop and stop order for those breakout traders, and those that have put protective stop loss for this bearish drop. They have trimmed their stop loss and have their stop loss here. There are orders up above this this relative equal high. I can actually make that note now. Relative equal highs which have above it buy side liquidity. We are not staying too long at this. Buy side liquidity is above it, and price have the tendency to go. What we are asking ourselves, where do we think price most likely is going to draw to? I'm expecting price to go lower, to first this inefficiency to rebalance it. That is what I see, and the reason, the logic is, we ask ourselves, where are we now? We are here, right below. We are here. Where did we come from? We came from this swing high, and how did we left the swing high? We left the swing high with a strong candle, with a strong wick, a strong drop from the swing high. I would have preferred to see the market, if I would want it, I would want the market to take this swing high, and that would for me it would be a definite we are going lower. But even if that is not the case, that they have taken it, we know and have in our notebook that they are an engineering liquidity above these relative equal lows. But for now, price have left this swing high with a strong drop lower and close below the last week close, below this week consequential encouragement. For me, from the weekly perspective, I am looking for the market to drop toward the sell side, and I am also considering the seasonal influence, that we are in the period where we might be seeing where we might be in a consolidation and range, a large range consolidation. I think price can and will expand toward this consequential encouragement first, then maybe toward the month May high and further in time. But for now, this week, I'm looking for price to drop toward this, meaning price might open, give us a Judas rally to the consequential encouragement of this week, or keep the June consequential encouragement week as a level, and then drop. So on the daily chart, we will be looking at how the level this week will influence price. If they will respect these levels. This could maybe this June is so close that I don't want my chart to be too busy. So what I will I will keep in mind that this wick, the gradient level of this weekly wick, this down close candle that have a weekly wick, that the gradient level are near the monthly level, with exception to this consequential encouragement of this long wick, but they are close, so I won't make the annotations. I will leave it and then have myself looking for the market to trade bearish this coming week. So we established that the weekly candle, we don't try to choose to predict the close, but the weekly candle will expand to the down side. That's all we do on the weekly chart. There are logics, there are reasons to where the questions that we normally ask ourselves on all-time, where is price now, where did we come from, and how strong have we leave that area. One can see price have dropped and trade into this, what you call it, it can turn into what is called an immediate rebalance. Just did not left any room for fair value gap, but I'm holding on the bias that this week was already a strong one, a strong drop and close here. We have now this one rally and close below the opening of this candle, so I'm going to look on the daily chart for reason to trade lower, and that is to say to be in a sell program. This is the daily chart. Our monthly annotation, our weekly annotations, we are carrying them over, and now we are at the daily chart. Right away we are looking at this daily busy. We are looking at this daily busy, and that price has been working inside this busy. I mark my chart blue. Whenever you see blue, you know that that is an annotation from the daily chart. When you see the color red, you know it comes from the monthly level. When you see the color green, this green, it is from the weekly level. There are strong reason for the market to want to go lower, and the reason I just told you about the familiar pattern that I would like to see whenever I trust a direction. From the weekly chart, we are looking at this downside. If you look, you see that the market have already traded and validate this bearish order block. This bearish order block. That is, this bearish order block is all these three series of up close candle forms this bearish order block. Price drop and validate that with this candle trading through the opening price, already signifying to the smart money we have already a change in the states of delivery. and price closed just, I remember when it was a bullish pattern, that I told you that this was a familiar pattern. I like to see this for me to trust that I just put my stop loss on the consequential encouragement, and then trust the direction to trade lower. So this is one sign for me that telling me that price is going lower because of the formation of this familiar drop. I want to see price open rally toward the mid of the mean threshold of this series of down close candle, respect the mean threshold, and then drop toward the sell side. With this in mind, the weekly candle suggests going down. This is one. We are seeing that price have actually wicked toward this last week, 2 week ago high. The body stays practically in lower than this body, but it wicked, telling me, giving me that they have just rate stops that were above, that have been engineered above these highs. They have just conduct stop rates. I would like them to take that, but I think they are engineered for another run on buy side. But the body practically stay below this this June 20th of 20 June candle. The body stay below it, and now we are expecting price to trade below this relative equal lows that we have here. Even these are giving to the retail traders the idea that there is a strong, what they will call strong double bottom or triple bottom resistance or support right here, and the market will just run through that safe haven and come lower because of how the algorithm is trading and is programmed to do. What we are expecting, we are looking also at this opening, which is volume imbalance. It's a daily volume imbalance. Let me make this remark. The daily chart is the chart that gives us the reason why and how price go from an institutional standpoint. Predominantly, the reason why price go high or low is clearly seen on the daily chart. And I have a rule for myself: whenever it is clear for me where price is going, it is one-sided, clear for me where price is going from the daily chart perspective, all I do, I'm not even stopping at the 4H. I'm going right to the 60-minute and conduct my analysis from there. We'll just stop a bit at the 4H just to show that we are also doing that. This volume imbalance on the daily chart, we want to see price is being drawn to it too, so it is a draw on liquidity, giving us another reason why price is going to go there. We have high, low, lower high. These candle also are a mitigation block. Price will most likely trade down, go to give some of them the reason to mitigate, and then continue going lower, as I'm expecting the seasonal tendency to unfold. There is this weekly busy still that is also a draw on liquidity, and within that weekly busy we are seeing also a daily busy. The weekly range expansion give us the directional bias for the whole week. Because of this weekly candle expand to the downside, we will be looking for sell opportunity, shorts opportunity, reason to sell, meaning that any rally that we will be looking at, we will be seeing those rally as suspect, Judas, and then Judas into a either stop rate to go down, or trade into an inversion value gap, or a how you call it, a PDRA to drop into the sell side. We see practically relative equal low here. We will hold first this analysis, not too much on the chart, until this May. Let me see what the range expansion, if we open here and drop to about this May high, we will keep that as for now what we are looking for on the this is the weekly. Now I'm getting the daily inside of my journal. For now, what we are looking for as draw on liquidity, this May high. There is also here swing low daily, can have it marked, and it is with the SIBI. So can give me, it is the swing low, sell side liquidity is below it, and it is prices straight from this consequential encouragement of this daily busy. So we are expecting price to continue to drop lower. This is what we have here, the range expansion. We already, let me once more calculate this range expansion about this. Take a picture. Normally I would do some annotation for the priming of my mind and for my journaling and back testing. But now with this audio review and analysis, I'm just doing the annotation from. Okay, if the weekly candle is telling us we are going down, there is reason. We have noted at least 3 reasons from the daily time frame that confirm that weekly directional move, which already is a strong bias for the coming week. This is how we determine our bias. We will go on intraday chart, starting with the 4H. Normally when I have my normally when it is clear for me, like how we have just painted what the weekly range is, what the directional bias is, I don't stop at this 4H, but it's good to do some annotation here. I use the color purple to see, use the color purple for annotation on the 4H, red for month, green for week, daily blue, purple. I hold the color for the 4H. This is price self rally. There is a small inefficiency there, a 4H inefficiency. I think that is what price self rallied to engage last week. Small inefficiency. Reason for Friday, that inefficiency and this high was the reason why price did rally last week. Is silly. You need to do some correct. Sell side imbalance, buy side inefficiency, and this one is sell side imbalance, buy side inefficiency. We leave that there is high here, engineered high, high, engineered, and now we see that price have rally. They have engineered a high here, price open. First, read this engineered liquidity that is here below. Trade to make balance this sell side imbalance, buy side inefficiency. Offered also buy side there, and start dropping aggressively lower. Price did drop and gave some liquidity, this one, but they have engineered wonderfully engineered liquidity below this high, giving us the more reason to want to see price go to the sell side. This is this one we call relative equal lows, with below it you have sell side liquidity. Everyone that is going bottom left, everyone that is going high in this run, these have put sell stop, protective sell stop right under these lows, and those that are trading with breakout strategy have here their buy a sell stop order. So there are two forms. We are looking from this chart. These two down close candle are forming what we call a 4H order block. It is a bullish order block. It's also a reason for price to want to go down there to maybe bounce from that bullish order block. If you are trading on less than 15 minutes, the directional bias derived from the 4H is what you need and what is most important for you to focus on, for it is a strong directional bias. Whenever we see a long wick or tail like this, it is good to grade them and have them gradient for the market. The algorithm will respect these level. This is consequential encouragement of this. Let me try this function. This consequential. I'm going to show this 4H tail. I didn't have to write 4H, for I know the color purple. I know the color purple is 4H, and the color blue is daily. Whenever I have that mark like this, and this is the lower quarter, 25%. We know that we take it. This is the, and this 75% be from this side is just the lower quarter, and now we have that long tail. We are seeing here what is termed one of ICT's strongest PD array, the immediate rebalance. The immediate rebalance is when the market does not offer deferred or a gap, but it trade and rebalance. This one did not. There is no gap here. This is immediate rebalance, and I wanted to see it a little bit more higher, but it is immediate rebalance. The mark close below this up down close candle, trade low, engineered liquidity, and close somewhere here. What we are expecting is that we are expecting price to open, trade higher, a little bit high, maybe not too much, and start to go lower. That is what we are expecting, and trade to these swing low. Not too much annotations on the chart, but these are objective on the sell side that we can aim for. This is what we have, and for me, from the daily chart, it is already clear that we are going down, so I'm not really focusing on putting too much annotation from the 4H time frame. We might, what price might do is just take these relative equal low, trade, make this trade to this imbalance, which is a flexible PD array, and gauge this trade to maybe this consequential encouragement and start going higher, or take this swing low and start going higher, giving us this expected seasonal summertime range, large range consolidation, or price may start going real lower. I think for myself, I will be doing some IPTA data range analysis so that I know how the past 20 days, past 40 days, past 60 days, which liquidity have been engaged. That is what I do on the daily chart analysis, and then I will have a stronger and a better feel to see where price is going. I will be looking to the continue. Let's continue. This is a 4H. I take a picture. I'll be looking at the other asset classes, the sister, the Nasdaq. I'll be looking at the YM, but also to see that is maybe when I'm done recording, to look at how the DX, the dollar index, if it is offering risk on or risk off until the 60-minute. I will be doing that, risk on or risk off, if it is offering risk on or risk off, and then we'll check it with the what we call the other major market like fiber, like GBP, USD, and check also gold. It is for us clear that on the 60-minute we see a shift in market structure. There is a 60-minute, and remember that there is a 60-minute gap. I make notice on the 60-minute with orange, it is this SIBI. Expect price to rise to it, rally to it, and maybe that is the purpose of this rally, and it is on the June. Remember that this is from the 1 hour, the monthly chart. This is a June monthly chart, weekly chart, daily chart annotation. This is from the, what we are looking at here is from the June, the wick, the June wick. We might see price trade to it and make balance this one, wick a bit to this how you call it, this June wick, which is high, low, higher high, which is a breaker. This is a breaker, and this breaker can be used to push price lower. So I'm expecting price to rally and then go down. Depending on how that will play, price may not go the first couple of days of the week, may not go high. Price may just trade to this, also 60-minute SIBI, and leave that one as breakaway gap, It break away from that SEBI sell side imbalance, buy side inefficiency. Price may open here, trade to it, and start going to the sell side. There is a lot of what we call a lot of liquidity below these lows, and there are also imbalances right here. 60-minute imbalance that are below that till he left. Make them balance. There is also a small imbalance right here. This volume imbalance from the daily chart is throwing price. From the 60-minute chart, what we are mainly doing on the 60-minute, I'm looking at the overall range, the weekly chart from the 1 hour. Look at the PDRA, try to find the narrative, and if the narrative is formed, the framework for the bias, and then I could have give this annotation. It's a long wick. It's just for stop rate. Turtle soup is it called. Stop rate, and then shift in market structure. Price have created this a swing high that has been taken here. Swing high taken in. Now we have a new dealing range. 60-minute dealing range. Very interested dealing range because of the sell side. The bias is clear. We are going. This is PMS equilibrium. Equilibrium of this new dealing range. I'm 60 minutes. Yes, we have him like this, and then we have premium above it. Discount price is now in deep discounts. What we are going to do is wait and allow price to rally into the premium. So we will not focus yet on this SEBI. I want to see price use this SEBI as a stepping stone and go to this buy side, to the buy side. I'm looking for price to rally to this SEBI. This SEBI that is being seen here, I will be respecting first this bearish order block to function as reason why price will not go. So this is for me breakaway gap to break away this breaker, and then we'll see price going to the sell side. So I'm expecting price to rally toward the premium side of this new dealing range that has been created, and then start going in according to the analysis to take the sell side engineered liquidity that we are seeing. So we will not open and start chasing price by selling right away. We will want to see price trade into premium, and then premium, let's just write that. Premium, the color must be orange. Okay, and then this side below it, if discount. So I'll be looking for the market maker to deal in these two. One can trade very nimble toward, because there is a range expansion about 50.22. Okay, maybe till this breaker 23 handle, Herein you certainly can find 500, but I am filtering out all other trades in line with my weekly directional bias, with my daily analysis and prediction. I will not be looking for longs. I will be focusing on what you call bearish. So every rally is suspect. Be nimble if you are traded. You just have to use use be nimble if you are traded. Use your half of your leverage for risk management, and then when you see sell opportunity, don't hesitate, for it is in line with what we have analyzed from the daily chart, from the weekly chart, even from the monthly chart. So I think the institutional is sponsoring sell side delivery, and that is what we'll be hunting these coming days. This week we will focus on that. This is the 60 minute. This is what I just told you about the time frame. This time frame, what I'm doing at it, what I'm focusing to see. And if one come and open my video to record and see all these lines and have not followed the movie, they will not be able to distinguish which line it's which. And it is clear for those that have stuck with me, have followed from the beginning, to know that the red lines are from the monthly level, the green ones are from the weekly levels, the blue are coming from the daily, the purple we have them from the 4H, the orange now we have them from the 1H, and then we go to the no, let me first take this picture. There is this question that we normally ask, or that we hear him always ask him, say, what is this range, this dealing range? Why is it useful? What you can do with it? That is, these are the logics, the reason that I will be reasoning that I will be analyzing. What were we doing before this range? It was practically, we're in a range where we have created a relative, we see we have created relative equal lows, big sell side liquidity. Prior to this range, we were in a range, there was a rally toward it. So we come from this high toward this low. I want to see the swing, impulsive swing. Is high toward this low, and equally where we are in deep premium relative to this range, so we are expecting still price to go on the lower side. I will be going to, I think I have the 60-minute cover already. I'll go to the 15-minute chart and want to make a remark before I go to the 60-minute chart. The reason, whenever we do our analysis, we are trying to cover every PDRA, everything that we see that can be used in our trading model, in our to frame our trading work, to give us a sign, a clue, or for us to understand certain level. When we are at the 15 minutes, we add the kill zones, and whenever we see price these levels and time in agreement, and there is an agreement to sell toward our bias, that is where we take the trade, and we leave the market to do its thing, but then we take the trade. What we see here, we see some 15 minutes. I use the color orange, and then this is 15 minutes. This color I'm using for, it's not red, it's not purple, it is pink. I'm using pink for 15-minute analysis. This is also the time frame where I hunt. There is a SEBI there. This SEBI is maybe will be used as breakaway gap, or if you pull this SEBI till this side, you may see that this be like a balanced price range. So the consequential encouragement or the equilibrium of this balanced price range is expected to hold price if price will rally toward that side. I don't expect that to happen. I don't expect that to happen. This is Friday trading. It have rally and engaged first. The buy side did not engage last 2 weeks ago high, so there is an engineered liquidity there, but we are looking at this drop, and this is what I normally do too. Whenever I see a drop with these kinds of stuff, I am right away beginning and thinking about buy side delivery curve, the market maker buy model, and I will be having that in my mind even though I have this drop, this belief that we are going to the sell side. I am going to be having this potentially what do you call this, market maker buy model in mind, because this is already my hunting time frame, the 15-minute and the 5-minute. So I'll be looking at this expansion. I will be looking if this is not an original consolidation, an expansion, a drop. I will be whenever I see this, I looking at it with something in my mind. It might be the development of a market maker buy or sell model. Either it is an expansion toward the upside or the downside. We are seeing they have already set the stage that we most likely will rally toward the buy side first and then drop. So what we want to see is that this that the market may open and rally toward the premium of this daily range, the daily new week and this newly dealing range. And when we reach this 15-minute above these relative equal highs, when we reach this 15-minute CB2, let me give this an annotation right here. I think I don't want to put too much annotation on my chart because I don't want it to be too busy. When I have that annotation on my chart, I want to see them rally in a Judah open, rally in a Judah swing, and when they reach premium above the equilibrium of the range, I want to see in a kill zone either London, not London, AM. This rally I'm expecting it in London of Monday, and then want to see in the AM smart money reversal using this high, low, higher high, this down close candle be a breaker. It is in premium above this, and it is right here. I'm expecting price to react off it and start trading lower. That is what I'm looking at, and it is for me plain. The analysis gives me insight of what to expect. It is left for me to make to see where we open, make the annotation, and then close this review. After I close, I have already mentioned I will do some analysis on the micro because of a group that I'm expecting to tune on with the station, the channel. So I will be watching. This is about 1.5 minutes, then we have the market open. I want to go to the 5 minute, to the 5 minute. What we do here at the 5 minute, we focus on the institutional range, that is the PM session high, this high, and this PM session high. We also can take the lunch high in account, and we are seeing a lot of confluence here. This is looking at a what you can call the consolidation, this high, and we want to make notice of these two. To the 1 minute, to witness the market open, how they will open the ES this week. Market open in about 1:15 seconds, and then when it open, all we do is we make notation, we annotate it. We have the low, it open premium, you just open premium, engage this small liquidity, trade to its consequential encouragement, and maybe we'll go higher, we'll start rallying higher. But we are not here to trade it. We're just here to witness the open, and it open premium, maybe this, and we annotate it like this. It is the Sunday opening, the current new week open, the Sunday opening, the Sunday of the 30th, and it is the open price, and it is not settlement, it is high of the current new week opening hub. It had settled at Friday, so we open. It is now, we open in premium. Price is aggressively trading down. We are not even looking at what it is doing now. We are not even into the rush, try to predict any directional move, because we are trading in certain kill zones, and we will be engaging price on only after 9:30. This is the new week opening gap. We define it. This is all we do right now. And that new week opening, this is consequential encouragement of the new week opening gap. It has been given to us, and what we do, normal, what I this is the ES. The same analysis I can do on the Nasdaq. It is the September contract. Same, the market open, it opened, we settled here at 6 o'clock. It opened not in symmetry with where did we settle? Is it? Yeah, we settled here. It opened and premium and dropped lower. This is how we will be trading in time to come. This is what I am focusing on to do, to have my naked chart like this, the ES naked chart. I'm enjoying seeing it like this, where I can see this inefficiency. I see this relative equal low, and see this small run to engage, but it have not trade into this SIBI. So I'm expecting price to first run into it and come down lower, and then going from the monthly and the weekly, maybe to begin at the 60 to trade, to see how we trade. I can do some SMT test, but I'll do that tomorrow with the London session trading, and this is where we are going. This is where we are trying to go to trade and have less and less annotation on a chart. Yeah. I normally look at this too. I'm becoming a professional at the how you call it, the ES, but I'm also trading the Nasdaq and using this Dow as barometer. Like for now, I can say from this 10 o'clock Thursday till 10 o'clock Friday, this line, some decline, and this is S&P. The market is making higher high with the S&P drop to take this, but have not confidently take it low, a trade into premium, and then we expect it to go lower to engage this sell side liquidity. Let me check the S&P on the Nasdaq. You see that the Nasdaq have also make a higher high. This is 10 o'clock to 10 o'clock. They are in tandem trading, higher high. Most of the time it is making higher high. We see they have engaged this, not fully. Price is rising to this premium, I am assuming, I am predicting, and then to go lower. So I go to the ES once more. ES. Also, this one has a swing high here, and I've made a greater high. So there is symmetry. There is no correlation, no break in correlation. So I wait for another time to do this analysis. We see that both have made the highs, none have failed to make the low. If I look at this, is a low that they have made. Yes. I check also the dollar index to complete the analysis for what I call the risk on, risk off scenario. If dollar is going up, the currency market, the forex market, fiber, which is Euro USD, is going down, which is risk off, mark to market. If dollar is going down, risk on scenario, the market, the currency on the currency market is going up, which is what you can call the risk on scenario. And this is what we are looking for the dollar. And what we would like to see is we would like to see the dollar rally. And if the dollar rally, it will give the other assets apart from the mark to market foreign currencies market, give them room for them to drop lower. What I'm looking at, the market have through this is a what you call the balance price range. You want to see how the market have trade. It have respect this balance price range. It will not go down. My analysis is showing that we are going balance price range, that we are going to trade higher and to engage this and to go further to take these engineered liquidity which are above this high. And if that is the case, then we are risk off, meaning the euro USD, which is fiber. Here I want to see Euro USD, Euro USD. Oh, I got it. The Euro USD have a big opening. This is if the dollar is going up, the Euro USD is going to go down. You see this gap have the tendency price will drop and fill this gap. We don't trade, I don't trade it, I just use it for intermarket relationship. Price may want to rally a bit up to these relative equal highs to engage this liquidity and then drop aggressively. Also the GBP USD, I'm looking at it and I want to see it want to go down too, because the dollar index is going up and risk off scenario go down. And I want to see the gold to complete. This. If the gold is going down to, I want to see it first. So there is a lot of inefficiency here. I want to see gold first. Really, there is a big drop, so gold is expected to go higher. And if gold is expected to go higher, not relative engage is one trade into. This might be an a how you call it, a balanced price range also. And want to see gold drop. Gold can drop lower too to make efficient these inefficiency. For now it is for me not clear. I'm not trading gold. I focusing. There is crude oil also that I sometime crude oil features. I sometimes look at it and let me clear them. I'm looking at crude oil too, just to see certain thing that I like to see, but mainly I go to the indices. That is where I begin my study, and that is what is now trading. Just waiting for some for the data to load up. Stuck somewhere at crude oil, and there we have indices. Remember, this is from the 68. This is an price come from a strong rally. We are expecting price to trade to the midpoint of this candle. Remember the familiar pattern. It validate this order block and trade toward the midpoint of this and start to rally toward this side. And in the bigger picture, we will not be engaging, just tape reading this rally, because we are holding to our bias. You can take it, you can trade it, but very nimble. And then the sell side delivery is where we will be focusing to focus on shorts. What is important is the time in which you are focusing on a trade. The time. It is time and price theory, and from I want to put these. This is the most. This is the 15 minutes. I'll go and have them. It's definitely going up to the premium, and I want to see that rally in the London or in the AM session of Monday. The PM session. This is a 5 o'clock London open with this. The silver bullet of London is there. When we have London, the 8:30 news embargo, which is the calendar, the economic calendar, and then you have the equity will open at 9:30. Then you have the AM silver bullet where we are executing now. Then you have the lunch hour at 12 o'clock. I have practically my range settled for tomorrow. And the PM session at 1:30, the macros start running for liquidity. And at the PM silver bullet, final trading hour, which is a very strong final trading hour. Remember, we are in the summertime, don't expect too much range, but there is going to be trading. We are expecting this rally to go up toward this buy side, a 15-minute buy side imbalance is there. We have also this premium, and at the side of the premium we will be looking for short opportunity. So we might see some consolidation or some small rally to engage this and drop to the current new week opening gap. And then at London, I'm expecting time and price. We have already set our price levels, and when time and price is in sync, that is where we will take the trade and rally to engage price. We want to see some high created and then drop lower, some high created and then drop lower. What we are focusing to do is yes, that is what there is one more thing that I want to look with you, and that is the calendar. The calendar is a very basic calendar. There is information, the PMI number on 10 o'clock. So whenever you will engage the market, do not trade before these news embargo come in. This is a good trading day, Monday, and we have the Fed chairman's speech, and this speech is a news event that is and can be used for manual intervention. So if you're not experienced, what you do is just leave the AM session, do something else on the Tuesday in the morning, and after the afternoon, after the speech, the PM session, come and do some trading. We have the non-farm payroll at Wednesday 8:30. That is together with PMI number and with FOMC minute at 3 o'clock. I will recommend new traders not to trade on this day because it is a strong volatile day. Bank holiday on the 4th of July. This is the what we call the 4th of July is the United States Independence Day. It is no trading day. That make that this non-farm payroll event will be on a high powerful roll, but because of the bank holiday before it, there are logics and reasons to think and reason why you should be careful at this trading day. This week seems to be what we call landmine week. A lot of news event, big news event. What they will do with the speech? Will they send the market lower? Copy. Will they send the market lower to the sell side? Will they rally to first engage that? Will they rally with these news event to engage? It is a week that I would recommend new traders to be very cautious. Will they really, I was saying, will they really to engage the relative equal highs that they've left here? Maybe because we are in a general consolidation, large range consolidation season. We don't know. We want to see. We have our analysis, and our analysis is just an approach to the marketplace. We approach the market with these analysis in mind, and we can be wrong, but we hope that our analysis is correct, and being correct, we are expecting price to rally to the premium side and then drop to the discount, engaging this liquidity that they have left there. I want to say goodbye for now. We are not even focused to trade to see what the market is doing right now. They will be gyrating maybe around this new week opening gap, or go above, a little bit above this previous last week new week opening gap. We are not interested yet. We want to see these activities in the kill zones so that we can engage them properly with the news. Welcome to the channel once more. Those that are subscribing, after this I will record, or I will go and do some analysis on the mini, that is the mini ESU. I will do analysis on the mini. It is practically an empty chart and no drawing. I will go on mini NU and I will do also, this is an empty chart analysis on the micro contract of these, where we have less. My eye is bringing me right to this one and to the city already, and then seeing that we may rise first to engage this and then drop lower. I will go. There is a characteristic of the micro that I will be covered during the session, but for now this is the ASU September contract. This is the analysis that I have, and me and Algo, we open book 9. This is the algorithm that I am writing. This is my partner, my algorithm that I will be using in the future to come to trade. I'm greeting you from Suriname once more, and I want to thank you for your attention. But not before I ask you to pay attention to the disclaimer, asking you to be very cautious when you go to the market. Go to your financial advisor, for nothing that I have covered is meant to be as of advisory information. It's just for educational purpose and for entertainment purposes only, and please take notice of this disclaimer whenever you will trade the market. This is the market with Odinga. I am greeting you from Suriname. I'll go say good night, wonderful trading week.